example, business will not run on its own, right? We will take loan from the bank. We will ask our friends. We will take help from everyone. Those are our liabilities, right? We need to return it one or the other day. So that is called as liabilities. So in accounting, these four words are important. Like, what is it? Like income, expense, assets, liabilities. These are basics of accounting. Okay. Is that good to go? And even it helps us to know how much we are in profits or losses, and end of the day we can make better financial decisions by using this concept. Accounting is the only one thing which we can rely on, because every business will maintain accounts. Even a small grocery shop, a startup, anything might be, even an MNC has the huge accounting cycle, right? Even see, they are hiring us for R2R. That's a separate this cycle of accounting. Even P2P is there. So many is there. So even a startup business will have their accounting, because they just need to know what are their profits, what are their losses, how much is spending, how much they're going under profits or loss. They'll just simple terms, they'll just get to know at the end of the month or the year or a quarter, they'll just get to know how much their income is or how much their expenses was and how much the losses they had faced. That's it. This is like accounting. Is everyone clear? Am I teaching speedily or something?
No, no, it's completely clear for me.
Okay. Then I'll just give you an accounting equation. Means if anyone is asking you like accounting, what is accounting? It's like a formula type which you can just mug up, or you should understand it before like mugging up or something. It is like assets is equal to, I will write it down here in the chat, okay? uh, Everyone, like, they had noted it down. This, once you note it down, let me know, like.
Yes, noted.
Okay, is this good to go? Okay. Like in simple terms, if anyone is asking you a formula or something, you can just remember what is accounting means. Assets is equal to liabilities plus owner's equity. It in that means what you own, means what is asset, like what is coming in your business, money flowing in, furnitures, assets, whatsoever is what you own. What you owe is like loans. You had taken loans from the banks, you have taken this some funds from your friends or relatives. That is like what you had owned, plus what is yours will be like your own investment, like your own money or your own thing. So this is a simple thing, like in order to make you understand, I just wrote this. What you own is what you owe is plus what's yours. That is assets. Understood? Any doubt? Okay. So certain key terms we have in accounting, that is assets, liabilities, equity, revenue, expenses. These are the key terms like we are using it in generally in accounting concepts, okay? Like assets, like what we are owning, like I said, like cash, buildings, equipments are all our assets. Liabilities is what we have debts or obligations, bills to pay. We have like we if we get electricity bill, that is our liability. We have to pay that, right? Water bill, everything, cylinders. For example, loans which we are taking, everything is like we are owing it. We need to pay it end of the day. So that is liabilities. Equities means owner's shares in the business. What is like if I'm starting a business, if I'm a owner, how much is the share amount I'm putting it in my business is what is equity. Got it?
Can you repeat it? Equity?
Equity. Equity is owner's money in the business, owner's share, the share amount. How much we are, if I'm starting a business, how much is my share in the business is called equity. Got it? Revenue is money earned, what we are earning it from sales, services. If we are starting a business, it will be either in service sector or a sales sector. So how much we are getting income from that is our revenue. Then expenses are cost to run the business. We will be getting day to day costs, right? To even to run the business, like rent we need to pay for whatever we are owing to run the business, and salaries which we are paying, wages which we are paying. Those are all expenses. Any doubt? Everyone clear this thing? Okay. Then comes double entry system. You guys can unmute and talk to me. You may interact with me. That would be very good. If not, I would sleep or you may end up sleeping.
No, it's clear. You're explaining, in very detail.
Thank you. These are all basics, okay? Before we start R2R, I'll just give you a brief of basics so that your roots will be strong. I don't know how many of them are from commerce background, non-commerce background, so I am just doing it from scratch. If anything like you are feeling it repeated or something, you may let me know. Okay. So what is double entry system? We have at least uh, two accounts, like whatever a transaction takes place, one will always be debited and the other will always be credited, right? For example, if we are buying a furniture with the cash, debit means what we are debiting here, furniture. That means we are increasing our asset, right? If we are buying a furniture, we are increasing our asset. What we are credit is cash. Why we are crediting that? Because our cash is going. We are spending cash to buy that furniture, right? So that is a credit. This is called double entry system. Am I clear?
Yes, you are clear. May I know that what are all the topics which we are going to conduct in the entire R2R sessions? Which are all the topics?
Already
That
shared the
I
PDF in the group, ma'am.
uh, that I think I'll be sharing it in a group later.
No,
The
no.
contents.
Mrs. Shiva already forwarded the content, course content yesterday.
Oh, okay, okay. It
Yeah,
includes
it's
basics
clear.
also in that content. I'm starting with little even more basics like double entry system and
No, it's
everything.
mentioned basic of accounting and basic accounting terms, accounting concepts. It's clear.
Okay. Is this clear now? What is double entry system? Double entry system is nothing but whatever transaction from a business we are doing it, it will always, it must have a two entry, like what is coming in, what is going out. I'll just let you know the golden rules of account as well later. But double entry system means, for example, if you are buying anything out of cash or out of anything, what is coming in is our asset, right? And what is going out, our cash is decreasing, that is credited. What is coming in is debited. So this is a double entry system. Am I good to go?
Please.
Yes, ma'am.
And also there are five types of accounts. Five types of accounts is nothing but, there are main types is asset, liability. I had already explained, I guess. If you had already noted down, you can just write there like types of accounts in bracket or something, okay? Assets, liabilities, revenue, equity, and expenses is our types of accounts, okay? Then comes financial statement. Financial statement is nothing but what and all we are using, like checking at the end of the year, quarter, or whatsoever when we are running a business. For example, we use balance sheet. You can write it down. Balance sheet, income statement, cash flow statement. Balance sheet, what it does is it shows our assets, liabilities, and equity, right? You all know, might be like in colleges and all, you're used to it. Just to in a short term, balance sheet shows us in assets, liabilities, and equity. You can write it down. And income statement shows profit or loss, income and expenses. Income statement shows our income and expenses. In bracket, you can write profits or losses. We'll come to know from this income statement. And in cash flow statement, what happens is we'll get to know how much cash is flowing in and going out. You can just write cash moves in and out. Till now, till this concepts, everyone clear? Everyone understood? You can mention in the chat like, if everyone is okay. Any doubts or anything you might ask me? Okay.
Can you repeat cash
So
flow
next,
management?
sorry?
Can you repeat cash flow statement, ma'am?
Cash flow statement is how much cash is coming in and going out. Cash moving in and out is cash flow statement.
Okay, fine.
Got it? Okay. I think golden rules of accounting you all know. Anyone can tell me?
Yes, personal, real, and nominal account.
Yes.
When it comes to real account, debit what comes in, credit what goes out.
Correct.
Personal, debit the receiver and credit the giver. Balaji is laughing. Maybe this is the question they asked in the interview, I guess.
Yeah.
And yeah, the first question is this one. No, the third question is this one for me.
Okay,
And when
okay.
it comes to nominal, right? Debit all the expenses and I mean,
Losses,
what cause
credit or
losses
income.
and credit. Yes, exactly. Yeah.
You can note it down. Personal account, debit the receiver, credit the giver. Personal account, debit the receiver, credit the giver. Real account, debit what comes in, credit what goes out. And nominal account, debit all expenses and losses, credit all income and gains. Is this concept clear? Golden rules, because I think even if you are working, if you have experience, they will ask this question always. Personal account, debit the receiver, credit the giver. Real account, debit what comes in, credit what goes out. And nominal account, debit all expenses and losses, credit all income and gains. Is this clear?
Yes, ma'am. Clear.
Okay. And we have accounting concepts. Before I would start that, it's like a 10 points of accounting concepts. So after this, I would wind up the session. Till now, any doubt or something? Okay, so you can
Uh,
write the accounting concepts.
Hi, madam. Just
It's also called as accounting principle. Accounting concepts. There are 10 accounting concepts. I would tell you first what are those, and then I would explain you. Okay, is that fine? First is business entity concept. You can write it down, business entity concept. Second is money measurement concept. Money measurement concept, done. Going concern concept. Going concern concept. And then accounting period concept. Accounting period concept, done. Cost concept. Next is cost concept. Then comes dual aspect concept. Dual aspect, ASPECT. Dual aspect concept. Then is matching concept. Matching, MATCHING. Matching concept. Then comes revenue recognition concept. Revenue recognition concept. Then comes accrual concept. Accrual, ACCRUAL. Even in interviews, they'll be asking you what is accruals, how do you record accrual posting,
My
why
first
do you do
question, but I couldn't
it?
explain in financial terms. Generally, I explained to them.
Okay. Accruals are like main parts of accounting. No matter in whichever this you go in accounting cycle, accruals will be like a repeated question. Then conservatism, last conservatism concept. So like what is business entity concept is, it is treated as separately. Business and the owners are separate. That is called business entity concept. Business is separate, owner is separate. Personal ones of the owner, personal recordings of the owner is not recorded in this concept. It is treated as separate. Business and person, in bracket you can write owner, treated separately. Business and owner treated separately in simple terms. You got it?
Okay.
And second is like money measurement concept, right? In this, what we are doing is whatsoever can be recorded in money, only that we are recording in this concept. For example, the skill level, employee has talent, but that skills, talent, and confidence and all, we are not recording it. We are recording the salary earned by him. That is like money measurement concept. What happens in money measurement concept is we are recording only money. That's it. For example, salaries, not the skills, not the what's, for example, not the employee skill. That this we are not looking at. We are looking only at the money. Money measurement concept is easy. You can just remember by the term itself. Money is what, like salaries we are earning. That itself is money, right? That is recorded in money measurement concept. Good to go. In going concern concept, what happens is we are seeing the business will continue. Business will be continuing. Assets are valued with an assumption, not at a selling price. Okay, assets are always valued at an assumption. In this concept, what happens is business will be continuing. It is going to run, like it will be operating based on the assets we have. Okay, we are not looking at any other thing. We are just considering here the assets valued. Whatever we have assets, in that we are running a business. Okay, anyways, business is going to continue. Business is going to operate is what going concern concept is. Got it? And next comes accounting period concept, right? In this, what we are separating it, accounting period concept, we are separating it monthly, quarterly, and yearly. You may all come to get to know like yearly, year closer, month end closer, quarter closer, right? In companies, you may have heard it. Like even in banks, they'll tell like year and month end activity, month end. Bank may not work, banks will be busy doing month-end activity. That is like accounting period concept. They're just dividing it here monthly, quarterly, and yearly. That is accounting period concept. Good to go?
Yes, ma'am.
And comes cost concept. Yes.
One minute. Yeah. Can you please explain again accounting period concept?
In accounting concept, we are dividing the time period like monthly, quarterly, and financially, like yearly. Okay, so for example, month end activities we will conduct. If you are running a business, right, month end we will just see how much we had done, profits or loss, or how much it is. Same way, every company, right, their financial this period is different. Some may do it monthly, some may do it quarterly, some may do it yearly to see their incomes, gains, expenses, losses. That is nothing but accounting period concept. Got it? Okay. Then cost concept. What is cost concept is assets are recorded. You may write down. Assets are recorded at original cost, not current market value. Assets are recorded at their original cost. For example, whatsoever machinery we are getting it, while we had got what was the original cost. It may machinery we had kept in the business we are running, we are using it. It will always be like decreasing, right? Machine will be using it, will be getting repaired. We will be using it again and again, it will be repairing. That means that value is declining. Though that value is declining, we are not going to see that price, the declining price. We will always see the original price when the machine was bought into the business. For example, it was bought for 1 lakh. That 1 lakh is what we are considering in cost concept. Understood? Then dual aspect concept is nothing but it will always have two accounts, basic of like accounting equation. I had already given you, right? Accounting equation, assets is equal to liabilities plus equity. That is dual aspect concept. Assets is equal to liability plus equity. Dual aspect concept means we will have two accounts here. In term dual itself, you just need to get like it have a two accounts, two entries. Okay, assets, if it is coming, we will have liabilities too, we will have equity too, right? So this is called dual aspect concept. Good to go. Then comes matching concept. You had already written. So what is matching concept is expenses should be recorded. Expenses should be recorded in the same period as the related income. Expenses should be recorded in the same period as the related income. Example to this is cost of goods sold. Cost of goods sold should be recorded in the same month. In the same month as the sales. When we are selling it, that cost of goods sold should also be recorded in the same time period. That is like matching concept. Expenses, whatsoever we are getting in this month, whenever we are doing the like accounting activity like month end or whatsoever, that should match. Cost of goods sold. Cost of goods sold should also be recorded in the same month as in sales. Got it? And revenue recognition concept is nothing but revenue is recorded when it is earned and not when it is received.
Please come again.
Revenue is recorded when it is earned, EARNED, and not when cash is received. For example, if we are doing a business, if we are selling something, we are earning out of it, right? That recording is called as revenue recognition concept. We are earning something out of our business after selling it. That comes under revenue recognition concept, not the amount of cash received from any other sources. Like we may receive the cash from any of our known people or something, that and all will not come under, which will not fall under this category. Revenue recognition concept only records whatever we are earning it. Our income is recorded when it is earned. When we are selling it, we are getting something, we are earning something. That is revenue recognition concept. Understood? And nine is the accrual concept, right? So you can write it down. Revenue and expenses. Revenues and expenses are recorded when they occur, not when cash is received or paid. Revenues and expenses are recorded when they occur, not when cash is received or paid. We are recording how much we are getting, earning, how much we are how much we had spent, expenses. We are recording only the revenue and expenses. This cash which we are using, cash which we are receiving, cash which we are paying is not recorded in this accrual concept. Got it? Cash thing is not recorded in this concept. Only the revenues, whatsoever the business transaction, right? We are doing something, we are getting it, and we are even spending it. That's the only transaction it's recorded in this concept. In accrual concept, we are not going to use like cash which we are spending and gaining. Cash transactions is not at all recorded in accrual concept. Understood? Last comes the conservatism. This is like this concept does not have but they don't use much, but still conservatism means we shouldn't overestimate the asset value. We shouldn't overestimate. Don't overestimate. You can write it down. Don't overestimate income or assets. Don't overestimate income or assets. Record potential losses. Record potential losses, but not future gains. So in conservatism, what happens is we are not looking at only the profits. In this concept, we are always looking at the losses. We are just assuming like this year, this losses may happen. Though our gain is there, though our profits are there, we are not. We are overseeing it, and we are just concentrating on the potential losses. Like for example, in a warehouse, goods are kept. It may damage due to the weather condition or something, right? Those are the losses for our business. So we are just looking at those aspect instead of looking at the income which we are like profits which are earning after selling those goods. Though we are earning something, are not looking at those. We are just looking at the losses, potential losses in the business. That is called conservatism. So these are the 10 accounting concepts. Any doubt? Today I had covered like accounting. Anyone can mention in the chat like what and all I had covered today? Just the heading. So is everyone okay with this, whatever I had taught till now? Like any doubts, anything? I'll give you just 2 minutes to think. If you have any doubt, we have 10 more minutes. You can ask me. You should go through this, whatever I had taught today, at least 10 minutes after the session or whenever you are free or tomorrow. You should go through all this. Then only it will be a practice.